What if the Palantir stock is not about AI dominance, but the assumption that perfection is permanent? Let me explain. Hey all, welcome to ShareTreck, where we bridge the gap between science and investments. I'm your host Raj. Friends, as I said before, we have some really bright viewers and subscribers. I had a very interesting exchange with one such subscriber who pointed out how high Palantir PE was. Of course, I'm aware that Palantir PE is very high, and I thought that instead of trying to fit all my thoughts into the comment section, I'd rather make a video to share my thoughts, to explain the current situation with Palantir and my personal opinion. I'll keep it crisp and short. Please watch it till the end and let me have your comments. Welcome back, friends. First, $1 billion quarter and what that means for us. Well, I'll explain why this milestone may or may not justify today's stock price. In Q2 2025, Palantir hit a landmark. Quarterly revenue topped $1.004 billion, a 48% increase over Q2 2024, driven by 93% year-over-year surge in US commercial revenue. This is from roughly $158 million to $306 million, and a 53% jump in US government sales to $426 million. Hitting $1 billion quarter shows Palantir isn't a startup. It's a large-scale enterprise with major growth drivers. If that trajectory sticks, the valuation might start to make sense. One explanation is the rule of 40. I'll show you what the rule of 40 is, where it comes from, and how Palantir stacks up. The rule of 40 was coined in the SaaS world by venture capital investor Brad Feld around 2015. It states that a healthy company's revenue growth rate plus profit margin should equal at least 40%. It was popularized as a quick litmus test for startup companies balancing growth and profitability. Palantir delivered a stunning rule of 40 score of 94 in Q2, meaning its 48% year-over-year growth plus roughly 46% adjusted operating margin met and exceeded the number 40%. And as a result, the share seems to have got explosive growth. Scoring 94% on the rule of 40 isn't just good, it's elite. But I think that we should keep in mind that this metric depends on how margin is calculated and how Palantir adjusts for stock-based compensation. That transparency is crucial when assessing credibility. And also, I think at this point of time, with the kind of revenue that Palantir has got, the question I would ask myself is, do we still call Palantir a startup? And can we still apply the rule of 40 to it? The next question I have is, are we paying for perfection? I'll break down why Palantir's valuation is a bet baked into perfection and what's at risk. Even with explosive growth, skepticism persists. Palantir's trailing 12-month PE is 600x range, while forward PE estimates is around 250 to 320x, depending on if analysts use GAAP or adjusted EPS. Analysts from Goldman Sachs, UBS, Mizuho, and Citi acknowledge the growth, but many still rate the stock neutral or high risk. The question is, what is their concern? Well, those multiples leave virtually no margin for error. If I as a retail investor were investing in Palantir, I would be betting Palantir won't just hit growth targets, but exceed them consistently. One quarter of softness or contract delay from any of its clients could mean big trouble for the stock. So the bottom line is that, here is how I see it. Palantir isn't your average growth story. It's bigger, more profitable, and its rule of 40 score is outstanding. But the question is, can you really use rule of 40 score here? That combination makes a strong case for justifying a higher PE, but again, should we be using the rule of 40? But let's be clear, the current valuation is already pricing it near perfection. And as an investor, I have to weigh that high bar against Palantir's ability to keep delivering, not just for a few quarters, but for many years. A PE this high comes in with elevated risk, and any negative surprise could trigger a sharp pullback. So I agree with our subscribers also that the PE is very high. There's a very high risk. And the fact is that I never considered Palantir for my investment. In the past, I've had Palantir. I made profits and I sold it off when I thought that the PE was becoming a bit too rich, even the forward PE. So that's my situation. Friends, now I have a small request for you. You have seen our channel grow steadily over the years and the programming quality improving step by step. I'm putting a lot of hard work into this. If you hit the like button, it helps our video reach more retail investors like you and strengthens this community. Can I count on your support? Please press the like button. It really makes a difference. That said, friends, my question to you is, what do you think of my analysis of Palantir and why the stock price is so high? The reasons why I think the market is justifying such high PE and such high forward PE. My personal opinion is that it's a very risky stock. Do you subscribe to my opinion that it's a very risky stock? Please put your thoughts in the comment section. I really like to hear from you. The entire objective of this channel was to build a community of like-minded retail investors where we can exchange our ideas and stand corrected if we have some biases or some wrong ideas about a particular stock. And this definitely is one of those. So take care, my friends. I'll catch up again with you in the next video. Bye for now.